Welcome to Pro Trader Strategies. We're an educational company and we're here for you folks so that you can learn about the markets and options, because we're implementing options in and around every strategy that we come up with. So what we're going to do is look at the markets, see how that's impacting our strategy, and then we will find the best strategy for that assumption. I can assure you that. Let's get on with the economic data and see what's going on across the pond with consumer price index. We got consumer price index, which is what we feel, producer price index, which is what the producer feels, because that's going to be the one that we really want to look at. The producer is the one that is purchasing. Are they able to offset those higher prices to the consumer? Well, it's starting to look like it, because we got Great Britain CPI coming in at 2.5%, hotter than the expected 2.2%, and core CPI. Remember, we're going to strip out some food and energy there because those are more volatile aspects of the data point here. Alcohol's in there also, but we don't really see a lot of fluctuation with alcohol these days. It came in at 2.3%, expected to be 2%, so higher than expected. Now we saw the PPI input coming in lower than expected, so they're actually seeing lower prices that they're offsetting from some of the higher prices that they weren't able to offset. It looks like those are being offset. Now we're starting to see lower prices by the producer, probably having to do with those oil prices coming off a little bit. That number coming off lower than expected. Next month, we're going to have to keep an eye on that and see if we continue to see these higher prices to the consumer, while the producer is not feeling those higher prices. All right, here in the United States, we also got our PPI. That comes in at 1%, expected to be 0.6%, so slightly higher than expected. Strip out food and energy and alcohol, comes in at 1%, in line, or sorry, slightly higher than the 0.5% there that was expected. Finally, we got crude oil inventories coming in. Now, they were expecting a drawdown of 4.3 million barrels. Remember, that was what we were expecting last month. We got a bigger drawdown than expected last month. Again, this month, coming out with the same reading, higher than expected drawdown. A drawdown of 7,900,000, almost 8 million barrel drawdown, double what was expected. That should give a little bit of buoyancy here to crude oil as we're starting to move along here. So let's take a look over at the markets and see what's going on. Couple of things to talk about here. Crude oil, still no real decision on output out of OPEC. It seems like they've kind of fallen apart there. We have seen a drawdown that should give a little bit of push to the upside here. Another thing I noticed that this weekend, I wanted to talk about this yesterday, is traffic on the interstates. It was actually pretty decent across the board. I drove from basically Scottsdale, Arizona to San Diego and LA. Traffic was pretty heavy across the board. Friday, Saturday, Sunday, and even Monday driving back was pretty busy. So I think that there is going to be demand for travel and leisure, but I don't think that it's actually going to fall on the airlines, folks. I think that more and more people are going to be getting out in these cars and their RVs. Remember last year, during this time, I was talking about jump on Thor, because I thought that more and more people were going to want to travel, but they were going to take that travel home or their travel trailer with them. And that's exactly what happened. We saw a massive spike there across the board. I think that this summer, more and more people are going to be getting back out in those RVs and driving. So there's going to be demand for crude oil through the consumer, us wanting to get out and drive. But the major driver of the demand for crude oil, remember, is in the manufacturing process. So don't get over your skis on that with the retail sales number. Also, higher interest rates. We're starting to look at the last couple of days here. We started seeing a bit of a spike here in interest rates. Here, let me throw it onto a bigger chart so you can see it there. I think you can see that a little bit better, folks. Can you see that easier when I throw it on that share screen? Please feel free to comment over on the side. If you want me to look at any stocks that you guys are looking at, please throw it over there. I'll circle back around even later today and make sure we're all clear there. Bonds are moving higher. Now, that means that interest rates are going lower. We talked about this time and time again, folks, when we're talking about interest rates versus the bonds. You can't always get an exact interest rate price just by ballparking it here. But what we do know that when we see the price of these bonds moving higher like we're seeing now, you can look at it like it's a teeter-totter, folks. As price goes higher, right, we see interest rates go down. So as we are moving higher here, we're actually seeing interest rates come off a little bit. That isn't good for the banks necessarily. Yes, we're seeing banks come out with their earnings first, right? We've seen Goldman Sachs, JP Morgan, I think Citi came out today. They're all coming out with better than expected earnings. Well, and that has to do with all this influx of money that the government was putting out there, and people are throwing it into trading accounts. We saw that massive boom with Robinhood. Well, you can see a similar situation happening here. Maybe not quite as massive as what, Robinhood felt, but still, the consumer was investing during that time, and Goldman Sachs and some of these bigger banks that are going to be housing a lot of assets under management, larger account size than what we would see over there at Robinhood, did very well during this time. But it wasn't due to the interest rates necessarily. It was more due to assets under management in the economy, the stock market doing very well for these folks. Now, in this type of environment going forward, they're probably not going to see as easy money as what we saw before. That's going to be a headwind for these banks. So therefore, I'm looking at the banks as seeing headwinds for the next 6 to 8 months. So that might be an opportunity for us in the short term. I'm not necessarily talking the big dogs like Goldman Sachs or Johnson & Johnson, but some of the other ones, I've seen some opportunities there with the chart setups that we might be able to set something up for a little bit longer duration bearish run here. So that's what I'm going to be looking for. But bonds starting to move higher as we are getting a basic system here where it seems like the markets are across the board in positive territory, albeit, yes, we're seeing weakness here into the close, or not into the close, but as the day goes on here in the E-mini S&Ps off the open, making those highs, but now clearly starting to retrace, as you can see, making some topping patterns. Now, yesterday I was looking at this bit of a topping pattern here. It didn't quite get down to close below yesterday's wick, but that generally is a dark cloud over a topping pattern here. Now, today we don't really have any confirmation. Market is near the wick of yesterday. Now, if finished well below that today, I think we're going to get that confirmation. The market's going to start to want to roll over here a little bit. But at this point in time, it's a little bit fuzzy as to what's going on. Again, similar setup here in the Dow Jones where we've got these topping patterns and another one at the top here. It just feels like this momentum, to me, folks, is starting to slow. So it's going to be an opportunity to add some negative deltas to your portfolio. Hey, that's a good thing. Right now, we are doing this webinar series on swing trades, and it happens to be on bearish setups. So if you want to check out some bearish setups that might be an opportunity to add some hedging or negative deltas to your portfolio, you know, when markets are at all-time highs and the markets are showing some of these weaknesses, it could be a good time to at least add a little bit of protection. All right. So make sure you guys hit that subscribe button down there at the bottom. Click on the bell so that you guys get notifications when we're doing the webinars. All right. Also, I'm going to pop in here every once in a while, unannounced, if you will. If I see a trade or something like that, I'm going to try and make sure you guys are jumping on. So if you get that notification bell, you will know when we're popping on there. All right. And please make sure you hit that like button. It does help us out. Finally, NASDAQ probably doing the best right now. I do think that there's a push to the NASDAQ, but you know, keep in mind the weighting in the NASDAQ is really heavily weighted towards like the Googles and the Apples and the FANGs, if you will. So there's a lot of stocks. I think that there's almost close to 50% of the NASDAQ stocks are below their 50-day simple moving average. Now, you've heard us talk about this many times. When you get below that 50-day simple moving average, the reason why we have that on as a chart is because then it starts showing some longer term bearishness. A 9-day simple moving average, very short term simple moving average, shows short term weakness. Now, once you get below that 50-day or the 200-day, that's really where you start seeing that bearish undertones come in full swing here. And then we've got gold moving a little bit higher. Now, you guys heard me talking about Bitcoin, gold, all of these things. We're seeing strength in the dollar recently, and we're still seeing some strength in gold. That is probably due to the fact that there's some inflationary fears in there. People are talking about transitory inflation, but the gold futures are not saying this is so transitory, right? Well, we're seeing strength in the dollar. We should see weakness in gold. But what is offsetting that? It is the fear of non-transitory inflation going forward there. Energy stocks, I think, are going to start seeing a little bit of weakness because, like I said, the demand is being driven by the consumer driving in the what is distilled from those products, right? And most of it's not necessarily going to gas. You got to remember, there's going to be airline fuel in there that's probably not going to be used as much. If my theory is people are going to be driving more than flying, then I think we're going to see a bit of a shift there on that, what they're producing versus they probably won't be producing as much airline fuel. All right, and then we've got Bitcoin. It's struggling and right there at the 3,200, right in mid 30s. That's what I've talked, or 30,000, I should say, not 100. Right in that mid 30,000 area is the sweet spot right now, and we're really seeing volume start to suck up. Something with these cryptocurrencies, we need new fresh blood in here to start coming in and buying and supporting these levels. Right now, it seems like the people that have been invested are kind of the diamond hands and holding and waiting. Well, when you hold and wait, that doesn't really give support to the market necessarily. You need new buyers, fresh blood coming in to drive that market higher. And I don't know that we're necessarily seeing that in the cryptocurrencies, and especially probably not seeing that over here in Boomer Coin, which is probably a horrible name for something like this, because I think it's going to get some of the newer investors to shy away from Bitcoin, despite the fact that I think, it being a household name, it will probably always be there, but I don't know that we're really going to see 100,000 in Bitcoin without a lot of new, fresh buyers coming into the market here. All right, so let's get on with the trades that I've done. Got a little long here. We're talking about the rest of the broader markets. I know there's a couple of other things I want to talk about, but for the most part, crypto volumes down 40%. Miners moving from China, trying to get out of China and moving basically to Texas and the United States. Some of those crypto miners are actually selling off their operations. So when they're selling these mining operations, basically they're selling little computers, folks, and all of the components that goes into those computers is what has been driving things like NVIDIA, Microsoft, all of those names really, well, maybe not so much Microsoft, but definitely NVIDIA and AMC, some of the other computer chips producers. Those guys are really what is going to be driving the Bitcoin boom or the crypto boom, because that's what goes into those components. Now, if people are selling those off massive amounts, I mean, we're talking 50,000 machines, folks, at 50% of value. Well, what does that do to somebody that wants to go out there and buy a new video card or create a new mining operation? Well, they're probably not going to NVIDIA to start building these out fresh. They're going to be able to buy these for a discount on the markets right now. So I think that that's going to hurt sales for NVIDIA, because you think about the amount of cards that are going into these mining operations is got to be a massive portion of their overall revenues. So I think that NVIDIA is going to see some weakness, and I'm going to be talking about this in a longer term bearish trade setup with the long put calendar. All right, so we're going to be talking about that tomorrow. I might be setting this up today because it's just everything's kind of working out quite nicely with this trade, and I don't want to miss out on it. So NVIDIA, I'm going to be talking about this trade specifically on how to do the long put calendar and when, where, and why we would set it up the way we are. And all of those details I'll talk about tomorrow in the webinar. So make sure you guys check that out. But a couple of trades that I've closed out is my Pepsi trade. If you guys remember, I put this on quite a while ago now, and it just really has never worked out very well. And I went into the August and I had bought the 150 puts and then sold the 135 puts. Obviously, the market moving higher. I didn't cover this before the earnings. I thought that we were going to see a little bit of weakness here, but they came out with earnings saying that the restaurant openings is really helping them out. Also, their snack food aisles, they mentioned one of their super hot chips that they have out there right now is really going gangbusters and doing very well. So spicy chips seems to be the theme of the new generation here. They love those spicy chips. I know my kids love the Takis and things. So I blew out of this trade. I originally got into this trade I paid $4.82. I dumped out of it for $1.29, so that was a loser. Coca-Cola is also a trade I took off for a winner, though. It's making the same types of moves based on what happened with Pepsi. They're saying the reopening trade is working for them with the restaurants opening. Well, Coca-Cola is really beholden to restaurants. They don't necessarily have the snack food aisle at the grocery store that Pepsi has for sure. They are really reliant on a lot of the restaurant sales there. So Coca-Cola making some moves to the upside, despite the fact that they haven't had their earnings and released that. People are following suit with what happened with Pepsi and jumping on board with that. But if you guys remember, I did this when we had high volatility in Coca-Cola, playing this trade as well to the upside, but with high volatility versus what we see here or saw there in Pepsi. The high volatility in Coca-Cola leads me to selling premiums. So that's what I did with Coca-Cola versus Pepsi. Pepsi had low volatility. That led me to buying a put spread. All right, limit that theta decay. I don't have to worry about the premiums being too expensive because of volatility. That's why I'm doing that put spread. Now, when I have high volatility, I don't want to be buying, because if that volatility comes out, I'm buying high and selling low. So with high volatility, those premiums I know intuitively are expensive. So I went into the July shorter duration on this one because I want theta decay. The Pepsi trade, I didn't want theta decay working against me. That's why I did those August. So in the July Coca-Cola trade, I have high volatility. I'm leaning towards selling premium. Well, I want theta on my side. So I sold the 53.5 puts in there for originally 43 cents, and I bought them back for 4 cents. So a winner in Coca-Cola, both basically a hedge, the Coca-Cola trade for the upside. Pepsi, I thought Pepsi probably wouldn't do as well with the reopening trade. I know Coca-Cola was going to do very well on a reopening trade because they are so reliant on the restaurants. So one winner, one loser on spotting these trades. And we got this trade on based on it bouncing off of the Fibonacci. We talked about this, got confirmation, and rode it to the upside. Volatility coming out. All of those things work in our favor. Theta, volatility, and direction on this one helped us win. With the Coca-Cola trade. Pepsi, it went the wrong way and it never worked out there. So one winner, one loser, and I haven't added anything, but I am looking at a couple of trades to add in the travel section. I'm looking at Love Southwest Airlines. Yesterday, looks like we got a top confirmation below the 200-day simple moving average. Remember, we just talked about the 50-day. This is even more bearish if we get a settlement below this. Now, I was going to pull the trigger on this trade this morning before basically the open, but when we opened up above that 200-day simple moving average, so I got a little bit shy on that trade. But this settlement below the 200-day simple moving average is going to be very interesting in that we could easily come down and test $46 for Southwest and possibly even 39 if things got really janky. But I do think that we would definitely trade 46 with a settlement below the 200-day simple moving average. So I'm going to be looking at that. Boeing already having some troubles here. We could even look at United Airlines, UAL, it's not below that 200-day, but another one where it is looking very bearish. So across the board, these airlines not looking so great. Something with Boeing's a little bit sidebar on that. I think it's a 787. They aren't going to be able to deliver as many. It has something to do with the cockpit pressurizations with the carbon fiber or something like that. So they're not going to be delivering as many, but they do believe that they will ultimately be able to deliver on those airlines. So some back and forth going on with Boeing, whether or not it's really going to be a long-term headwind or whether they're going to be able to kind of brush through this. But bottom line is The airlines, I think, are suffering due to the lack of air travel, more and more people driving, and that's going to be a headwind for them. Boeing, similarly, people probably won't be ordering as many airplanes if they aren't flying, but right now the orders that they have are getting a little bit backlogged due to the regulators kind of making sure that they're checking off all the boxes this time rather than letting a Boeing airplane in the air and fall. All right, so that's it. So I'm going to be looking at those trades, like I said, for bearish setups, adding some negative deltas to a portfolio, and we'll talk about how we really dig into those underlines to find the right strategy for an assumption. We aren't just saying, like we showed here, bullish assumptions or bearish assumptions, we always pick the same strategy. No, what we want to do is know the pricing, and that is going to help us find the right strategy. All right, so without any further ado, if nobody has any questions, comments, or wants me to look at any charts right now, then I'm going to wrap it up. I'll give you guys a couple of seconds. I know there's a little bit of a delay on the comment section over there, so I'll give you guys a second. If you want me to look at any stocks that you guys are checking out these days, I'll run it through some analysis real quick, shooting from the hip. All right, then. If we don't have anything else, like I said, subscribe, hit the subscribe button, but make sure you guys hit that bell so that you guys get notification if I come on here at an unannounced time. Also, comment over there on the side there. I'm going to reach back around for you guys. Make sure you guys are all clear of concept if you're watching this a little bit later today or even tomorrow. And finally, please smash that or take that. Bye for now and take it easy.